Hello everyone, hope the weekend's going well. This is Joe Kinahan, Chief Derivative Strategist with Thinkorswim with our weekend wrap-up show for the weekend of April 12th, 2008. Friday, not much to say except the market got smacked. We talked about it for a week. We said GE was the focus for the week. How they came out was how the market was going to go, gave us a good sense of what the earnings season was going to look like. Well, we see what the earnings season is going to look like, and it may not be a pretty one. GE was the first multinational to come out. Their earnings disappointed the street badly. The reason they really disappointed the street, to keep in mind, not just because the numbers were so bad, because GE in their guidance call 4 weeks before had said, this is going to be a pretty nice quarter. We're pretty confident. What came out was during that credit crisis, the St. Patrick's Day weekend, they had a tough time with that, and that's really what ate into their profits for the quarter. So I think it's important that the market was down not necessarily just because GE had bad numbers. GE lost some credibility with what went on over this past Friday. So that's very important to keep in mind. I would look for volatilities. Next time GE's earnings come out 3 months approximately from now, look for volatility to be very high. The market lost a little bit of confidence in GE itself on Friday. So that's something to keep in mind. All right, let's talk about the day that was, the week that was. As we said, GE was going to be the focus, and it most certainly was for the day. We saw the Dow down 256 points on Friday afternoon. 29 decliners, one sole survivor, one advancer on the Dow. Walmart, WMT Walmart, up 14 cents on the day Friday. Everything else in the Dow was down. S&Ps, the E-minis, at a very key level. I mean, they were down over 27 handles. When I say handle, I mean points on Friday. They are hovering just above, as we've talked about this level quite a few times here, 1333 even. We're right at that level. Be very interesting to see in Monday's trade what happens there. Can we bounce off it, or we continue down right through it into the ugliness? The VIX still only at 23.5. There's a belief out there that we can continue to bounce. So that's very interesting to keep our eyes on also. I would watch that VIX number right out of the gate on Monday. It's going to give you a good, shall we say, signal as to what the market's thinking about these numbers, what we're thinking about the future. What should we be focusing on this week? Number one thing we have to focus on is going to be, the number one thing for the week, actually, is going to be on Wednesday with CPI. In the shorter term, on Monday morning, we have retail sales. We're going to have to keep our eyes on that. It's going to set the tone for Monday. But CPI is what's going to set the tone for the week, and that comes out on Wednesday. In between, we have a big number. Intel, always a very important earnings number, a high-tech. They kind of set the groundwork for the high-tech numbers. That comes out Tuesday after the close. So we have 3 days in a row with 3 numbers of fairly big significance. So that could set a nice tone for the market or a really ugly tone for the market. Retail sales should tell the tale, shall we say, for this 1333 even number on the S&P. Something, again, to keep in mind as we head into trade on Monday morning. All right. Other than that, it was quite a week, as we said, but GE finished us on a bad note. We head into this week. We have some things to watch, some levels to watch. Again, VIX 23.5. As we said before, 25 is kind of our area that we're getting a yellow light of warning. Things could get ugly here. Keep that in mind as we trade. As always, hope everyone had a great weekend. Joe Kinahan, Chief Derivative Strategist with Thinkorswim. And again, good health and good trading, everyone. Thank you very much.